Chairman.
Good morning, Rachel, and good morning, committee and officers. Welcome to this virtual meeting of the Pensions Committee. Before I start, just be aware that the press and public are invited to listen in to us. And secondly, before we move to the first item, this is possibly the last meeting for some of us, perhaps all of us, apart from the officers, of course, but on the Pensions Committee. So hopefully we'll see you all in the next municipal year. However, if we don't, I'd like to thank you all for all your support over the last years since the last election. And hopefully, as I said, we'll see each other again. I also like to thank all the officers, just in case I'm not here, for all their support. It's been tremendous. And thank you, Joe, Claire and Rachel, especially for all the help you've given. I assume that all the papers have been read in advance, so we don't intend to go through each one page by page. However, of course, you're welcome to ask any questions of the officers or make any points as.
Councillor Mrs Rawlins.
Present.
Councillor Thompson.
Present.
Mr Andy Ancliffe.
Present.
Steve Larter.
Present.
Councillor Waller.
Present.
Thank you. We also have the following officers in attendance. Officers are not expected to confirm their presence. We have Andrew Crookham, Executive Director for Resources, Claire Mackey, Accounting, Governance and Investment Manager, Joe Ray, Head of Pensions, Peter Jones, Independent Advisor, Eunice Gajra, Head of Governance and Business Development, West Yorkshire Pension Fund, Lisa Darville, Client Relationship Manager, West Yorkshire Pension Fund, David Morton, Investment Consultant, Hymans Robertson, and Ian Campbell, Investment Consultant, Hymans Robertson.
Thank you, Rachel.
Yeah. We haven't received any apologies, Chairman.
Thank you, that's excellent. Glad we're all here. So if I can bring you to item 2 then, declarations of members' interests, please declare. Have we any declarations of members' interests? Steve?
Thank you, Chairman. If I could declare an interest as a deferred and an active member of the pension fund.
Okay, Andy?
Thank you, Chairman. If I could please declare an interest as an employee of LCC and a contributing member of the fund. Thank you.
Thank you. Paul?
Just to say my daughter is an active member.
Yeah,
Sorry, they both came in at the same time. We could take Paul first and then come back to you, Bob. Paul?
Yeah. Thank you, Chair. As an active member of the pension scheme, Chair, thank you.
Thank you. Bob?
My daughter works for the County Council, is an active member of the fund. Thank you.
Thank you very much. No other declarations. Therefore, we shall move on to item 3, which are the minutes of the previous meeting held on the 7th of January 2021. If I can take you through the pages, just a moment. Yes, the pages one by one, just for accuracy, and then once we've gone through that, if there are any matters arising, I'll take that. So, page 1, 2, 3, 4, 5, 6, the small part at the top of page 7. Are there any matters arising, first of all? No matters arising. What I'd like to do, Rachel, is I need a proposer, a seconder, and we will vote that the minutes are a true record of our meeting on the 7th of January. So can I have a proposer, please? Okay, I'll propose the minutes are a true record. Could I have a seconder, please?
Chairman, I'll second Councillor Buttroyd.
Thank you, Richard. Rachel, could you do a roll call to say that the minutes are a true record, please?
Yes, thank you, Chairman. I'll read out members' names alphabetically, and if they can state for, against or abstain when their name is called. Councillor Strengill.
Agreed.
Councillor Coupland.
For.
Councillor Adams.
Abstain, I wasn't at the meeting.
Councillor Bootroyd.
For.
Councillor Key.
Abstain, as I wasn't at the meeting. Thank you.
Councillor Perrotton Williams. I don't think she's joined us. Councillor Rawlings. Councillor Rawlings.
For Rachel, if I was at the meeting, I can't remember if I gave my apologies last time. I think I may have.
Councillor Thompson.
For.
Andy Ancliffe.
For.
Steve Larter.
For.
And Councillor Waller.
For.
Thank you. That's agreed, Chairman.
Thank you, Rachel. As it states on the minutes, in fact, Sue, you weren't at the meeting. You did give your apologies.
Correct, Mr. Chairman. I do apologise. I'm not putting my brain in gear this morning. Apologies. Thank you.
That's all right. Thanks. Right, those are passed as agreed. So we'll move on then to item 4, the Independent Advisors Report. Over to Peter.
Thank you, Chairman. The conclusion of my paper that was written about a fortnight ago was that in respect of global equities, it was still right to travel hopefully. But I think there are a growing number of caveats, which I'd like just briefly to touch on. But firstly, the important event is the Joe Biden, the President of the United States, stimulus package of no less than 1.9 trillion US dollars. This is a figure that's so big, I don't think any of us can comprehend it, its size, but it is about 9% of US national output. It's a very, very big figure. About a third of this is checks in the post to very many private individuals in the United States. And I think those checks go out this week and next. So it is going to be cash in the bank for very many US families in the next little while. And a lot of that cash is going to be spent on goods and services. And what doesn't get spent might well find its way into the stock market. So this is a huge stimulus to the US economy. And in particular, it's so large that most commentators think it has global implications. I mean, the most obvious one, of course, is the effect on imports sucked in from China and other places like Mexico and Canada. So, Chairman, the analogy of the US economy, which is going to grow strongly, is a bit like the ocean liner, or if you prefer, the oil tanker. A course has been set, and it's pretty difficult to see the ocean liner being driven off course. Could it be, well, an entirely new, more lethal coronavirus? Maybe, but you'll have your own views on that. What are the caveats? Well, the principal one is the long-term interest rates, which have risen pretty sharply so far this year. For example, US 10-year bonds were 0.5% late last year. They're now above 1.5%. Doesn't sound much, but it is to the professionals. And those interest rates and others are rising because of fears about rising inflation. The fears are based on really the size of this enormous stimulus package. Now, opinions amongst economists are pretty much divided. It's clear inflation will rise. For example, the oil price has nearly doubled over the last 6 months. And there are other special factors. I mean, in Germany, for example, there was a VAT cut last year, and that VAT cut has now been reinstated. So there will be an effect on German inflation. So globally, inflation is going to rise. But what is not clear is whether it's going to rise to, say, 2 or 2.5% around the world and then fall back, or whether it is set to rise substantially over the coming years. And I have seen a figure as high as 10% forecast for 2022. Personally, I don't believe it, but it is in the marketplace. I was reminded, reading minutes, of Councillor Mrs. Rawlings' question at a meeting last year about speculation in the tech stocks. By the tech stocks, I mean the Amazons and the Googles and the Alphabets of this world. And I said at the time, these were major beneficiaries of COVID because of home shopping, remote working, and so forth. And their profit prospects were hugely enhanced. And with falling interest rates, those valuations could rise sharply, as indeed they did. But of course, COVID is now in retreat, certainly in the United States, and it looks as if it will be elsewhere in the second half of this year. So those stocks have less good prospects, and of course, interest rates have started to rise. Interestingly, the tech stocks fell very sharply between mid-February and mid-March, something like 12%. And the reason I mention the 12% is that the characteristic of all the markets of the last few years is that once markets fall something like 10%, cheap buyers come in. Yes, there's a battle between the bulls and the bears in the stock market, but for the time being at least, I'm pretty sure the bulls are in control. Chairman, I wanted to conclude by talking about the role and the actions of the global central banks. By that, I mean the Bank of England, the European Central Bank, the US Federal Reserve, and so on. They've assisted direct government support for their respective economies by providing ample liquidity, enormous liquidity. And they've done it by doing two things: buying their own government securities to put cash into their economies, and by lowering interest rates to orders of magnitude 0. Now, central banks, and of course governments as well, the last thing they want to do is to take any action that aborts the economic recovery by withdrawing that liquidity too soon. As long as the central banks are unconvinced about the pace of economic recovery, I think the outlook for equities is still positive. But perversely, and I think I said this at the last meeting, the time to worry is when everybody's convinced, the central banks included, that all their economies are set for a robust economic recovery. The US Federal Reserve yesterday said that it was going to hold interest rates unchanged until at least the end of 2022, i.e. for a good 22 months. The European Central Bank actually is still pretty anxious, and it increased its bond buying capacity last week. And our own bank, the Bank of England, meets today. So I'm going to leave it there, Chairman. It's right to travel, hopefully, but there are some distinct caveats out there.
Thank you, Peter. Does any member wish to ask a question of Peter's report on Peter's report? Please use the chat box if you wish to speak, by the way. I should have mentioned that earlier. Can't see anybody indicating. So thanks again, Peter. Yes, so it's a very volatile situation at the moment, up and down. I see the markets moving all the time. I've got a particular interest in some funds, and they really are fluctuating. One day they're down, the next minute they're up, and I do appreciate exactly what you've said there. So thank you again for your report. No other speakers, so therefore I will move on to item 5.
Chairman, I think Councillor Rawlings has indicated that she wants to speak.
Right, I'm not sure.
I've got a hand up.
I do apologise, Mr. Chairman. I'm struggling to get in the chat box. I do apologise.
Okay, fine. Carry on, Sue.
A very quick one. Thank you for your very comprehensive report to us, Peter. It's very interesting. If inflation goes up and interest rates go up, surely we're going to have we could have a perfect storm of sort of interest rates feeding through into the real world, in which case there's going to be an awful lot of struggling individuals, businesses and general economies. Can you just comment on that, please?
Entirely correct. But of course, the last thing the governments and the central banks want is that. And the $64 question is how far up they are prepared to let inflation go and how far up they are prepared to let long-term interest rates go. And at the moment, the markets are perhaps treading on eggshells, but they're comfortable that interest rates won't rise, I'm choosing an arbitrary figure, much above 2%, and inflation won't get much above 2%. But if you were right and inflation got to arbitrarily 3% in the United States, then I think the Fed would feel bound to take some action.
Okay, thanks for your question, Sue. Thank you, Peter, for the answer. No other speakers? Roger, are you wanting to come? No, you're ready for the next report, aren't you? So moving on to item 5, the report by the independent chair of the Lincolnshire Local Pension Board. Over to you, Roger.
Right, thank you, Chairman. So this is my latest quarterly report and includes items that we discussed at the January meeting. There are 3 issues I'd like to bring to the Pension Committee's attention, Chairman. First of all, data scores, then employer monthly submissions and contribution monitoring, and then the deep dive into the Borders to Coast partnership. In relation to data scores, there was an improvement in what is termed scheme-specific scores. 84% compared with 77% 6 months earlier. So, you know, there's a 7% improvement there. That said, it's still not good enough, and West Yorkshire Pension Fund continue to work on their data improvement plan. As regards the employer monthly submissions and the contribution monitoring, there were 57 late data submissions and 13 late payment of contributions for the half year 30th September 2020. I mean, we normally take a pretty hard line on this, but because of the difficult operating conditions as a result of COVID, I guess we were more sympathetic. The later report, which you've got on your agenda, shows that there were 5 late payments and 48 late data submissions in Q3. And I noticed that November and December, there were no late payments, which is a good sign. So, you know, we'll just keep, Joe's team will keep the pressure on the various employers to get the payments in on time and also the data submissions. The Pension Board, Chairman, spent quite a bit of time discussing the deep dive into Borders to Coast partnership, and I've attached the report, and hopefully Pension Committee members have found it of interest. It's a long report, but I'll just make 3 three brief comments. First of all, Borders to Coast Operating Company, in other words, the investment management company, is owned by 11 local authority pension funds, one of which is Lincolnshire's. And I think, that really needs, members really need to understand that this is, so Lincolnshire's got an 11th share in it. So far, the pension fund has invested 909,000 in share capital and £975,000 in operational expenditure. That was up to 31st of March 2020. And moving on to that, before pooling was introduced, Hymans produced a report stating that savings would be achieved of between 190 to 300 million pounds per annum after 10 years. That was their view of what the economies of scale from pooling would allow. The pension board have been asking questions about when is this monitoring going to take place, and we were delighted to hear from Joe that work is currently underway to develop some sort of template to capture and calculate the savings achieved through the pooling of assets. Now, this is going to be difficult, it's going to be complex, but I think it's something that we need to watch with interest because Hyman said 190 to 300 million after 10 years. It'll be interesting to see whether that in fact is the result. The only other point I wanted to raise, Chairman, was we identified a potential conflict of interest with the composition of the Borders to Coast actual operating board. And you'll be aware of this, that two non-exec directors are appointed by the partner funds. It's fair to say that Lincolnshire did not support this arrangement and has not made any nominations. I don't know, it's just, I feel pretty uncomfortable about it. And so did the pension board, but it's something we've got to live with because we're in the partnership. The others obviously, or not all the others, but certainly a majority were in favour. I guess in conclusion, our view was that the government arrangements are largely strong. So I think that really is enough, I should say, Chairman. More than happy to take questions if there are any.
Thank you, Roger. Just a couple of points, not so much a question. You're absolutely right about the NEDs, as they're called, the non-executive directors. We did not have, we were not in agreement with that. As we all know, we live in a democratic society and it's always a majority decision on things like appointing people. However, we move on. They were present at the last meeting, which was within the last couple of weeks, which I attended online. The point about the 190 to 300 million per year will be interesting to see the findings on that. The whole concept of pooling, of course, is about value for money, as well as obviously achieving fund performance, etc. And I think that's the reason for being, really, is value for money, to actually reduce the fees paid and make sure that the pension funds are secure within the 11 as it now is, because there were 12 when we started in the pool, 2 amalgamated, and of course there's now 11 funds, 11 chairmen. Right, so that was the other point. The deep dive was a good report, so thank you for that, Roger. It's good that you're monitoring everything that's going on in Border to Coast. From a personal point of view, I think it's running well from what I see on the board, and we have private sessions as well, dealing as shareholders before the actual meeting, and any points that we wish to raise with the operating side we can bring out at that point. But there weren't very many big concerns, small niggly concerns that were rectified at the meeting. So thank you for your report. Any questions from any member? Can't see any in the actual chat line, and of course can't see any hands, but that doesn't mean because I can't see them, we're not there. So Rachel, can you confirm there's no one wishing to ask a question?
I don't have any speakers and I can't see any hands.
Thank you, Rachel. Thank you, Roger, for your report, and good luck with your meeting this afternoon. And you need to get that cricket recorded.
Don't worry, I will. Thank you, Chairman.
Members, the Pension Committee are asked to note the report, and of course the recommendations are twofold, one on page 19 and one on page 23. And on 23, that the board not only notes the report, but consider if there's any further information they would like to receive or actions they would like to take. If anybody does have anything they would like to put in, then please do it in the chat box. I'll give a couple of seconds. Nothing forthcoming, so we have noted the report. So thank you, Roger. Appreciate that. So we'll move on then to item 6, which is on page 35. Over to Joe.
Thank you, Chairman. This is the standard quarterly paper, so there's just a few areas that I would like to highlight. Section 1 on page 37 at paragraph 1.8 shows the funding level at 31st of December as calculated by Hymans, and paragraph 1.11 shows the equivalent funding level calculated by Barnet Waddingham as they detailed in their training held last month. Going forwards, obviously, we'll lose the Hymans-Robertson one and we'll only be showing the Barnet's values. However, I thought it was appropriate to have the two, given the end of December, Hymans were still our actuary. At section 4 on page 40, this provides an update on the risk register, and you'll be pleased to hear that the only red risk that we have had there for a number of years due to the economic uncertainty over Brexit has now been removed. So there are no red risks currently on the risk register. Section 6 on page 41. This updates the committee on the progress of the good governance review that the Scheme Advisory Board commissions. Hymans-Robertson were appointed back in 2019 to undertake the research into this project and provide recommendations to the Scheme Advisory Board. As part of that research, a large number of stakeholders in the LGPS were interviewed, including myself, and workshops were held to gather information on current governance arrangements and areas where improvement could be considered. Previous reports on this have been brought to this committee, and the final report and the action plan that the Scheme Advisory Board have brought together has been sent to MHCLG, and these are attached at appendices E and F. There's no additional consultation at this point with Hymans or the Scheme Advisory Board on these reports, though. Key areas where Hymans have added further clarity to the report are all highlighted at paragraph 6.3. Once MHCLG have considered the report and action plan, they will then consult with the stakeholders on their proposals for implementing this, which will be shared with the committee for discussion and response once that comes out, hopefully later this year. Section 7 on page 42 refers to the objectives set for the independent advisor to the committee, Peter Jones, following the CMA order in 2019. Objectives were also set for the investment consultant. The objectives are set and Peter was asked to self-assess against these objectives, and I've set his responses out at paragraph 7.2. There is a recommendation here for the committee to review the responses from the investment advisor and consider any changes or improvements required. So I will just stop here to ask whether Peter would like to add anything, or whether at this point there are any questions that the committee has for Peter. Thank you.
Peter, have you anything to add?
No, nothing to add. Thank you, Chairman.
We've got Councillor Mike Thompson wishing to speak. Mike?
Yes, thank you, Chairman. It's not a question, it's an observation. I must say that as a non-specialist in finance, I have found Peter's contributions understandable and very helpful in following the global changes and so on. So I think I'm very happy to comment to that effect. Thank you.
Thank you, Mike. Back to you, Joe.
Thank you very much. If we move on then to section 8 on page 44, this details the upcoming tender for the investment consultancy service, which is currently supplied by Hymans Robertson, and this will be done through a call work from the national framework. As with the actuarial tender last year, we'll be looking to create a working group to undertake the process that's set out at paragraphs 8.5. The committee do have a recommendation here again to approve the creation of this working group. So therefore, assuming that is approved, following the May elections and the County Council annual general meeting in May, officers will then request volunteers from the Pensions Committee to participate in that group, and will bring a recommendation for appointment to the October Pensions Committee. The final comment that I'd like to make is on the training and conferences section, section 9. Obviously, we haven't attended anything in person since the last meeting, but as with previous quarters, there have been many virtual webinars and discussions and meetings held, covering the usual hot topics that we've heard of again and again on COVID, McLeod, 95k cap, amongst some other things. So at this point, the committee are asked to share their comments on any training events they have attended. Otherwise, I'll then be happy to take any other questions on the report. Thank you.
There are no other points forthcoming that I can see, Joe. So are we happy to move to the recommendations, or are you still wishing to continue, Joe?
No, I'm finished. Thank you, Chairman.
Thank you. Members, there are 3 recommendations, although the main one, the first one is to note the report. I want you to take all 3 into consideration, and we will vote on this. So the first one is obviously to consider and note the report. Secondly, consider the performance of the independent advisor and consider any changes or improvements required. And finally, approve the creation of a working group of officers and volunteers from the Pension Committee to consider the actuarial appointment, and following due process, recommend an appointment to the October meeting of the Pensions Committee. So we will vote for, against, or abstain, please. So if I could have a proposer, first of all.
Move, Chairman.
Sorry, who was that? Sorry.
Bob Adams.
Bob has proposed it. Could I have a seconder, please?
Chairman, Councillor Buttroyd, I'm happy to second.
Thank you, Richard. Rachel, if we could go to the vote, please.
Thank you, Chairman. Councillor Strangill.
For.
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Bootroyd.
For.
Councillor Key.
For.
Councillor Rawlings. For. Councillor Thompson.
For.
Andy Ancliffe.
For.
Steve Larter.
For.
And Councillor Waller.
For.
Thank you, Chairman. That's unanimous.
Thank you, Rachel. Right, we shall move on to item 7, responsible investment update. Over to you, Claire.
Thank you very much, Mr. Chairman, and good morning, everybody. This report brings to the committee details of the fund's responsible investment activities during the last quarter. This is a new report for the committee. Previously, information on RI had been reported in the fund update paper. This has now been separated out to give the committee a greater opportunity to consider the RI matters which face the fund in more details. This is an area of development still for the fund, though, with increasing importance being placed on RI reporting and monitoring by such things as the Stewardship Code, which the Council hopes to sign up for later in the calendar year. Further information will be brought to the committee in future reports as our reporting in this area develops. But for this quarter, the report considers the activities which have been undertaken on behalf of the fund, primarily by the work of LAPFF, the Local Authority Pension Fund Forum, Border to Coast, and Robeco. So I'll take each of these and just explain a little about what has been happening and where further information can be obtained by the committee. LAPFF is a voluntary organisation. It's got 82 public sector pension fund members at the moment and 7 of the asset pools. It works on behalf of members to promote long-term investment interests for local authority pensions. And they hope to maximise influence as shareholders, promoting corporate responsibility and high standards of corporate governance among those companies which we're investing in. Paragraph 1.3 of the report details the work that they've undertaken during the quarter, and this includes company engagements, supporting sector-wide initiatives, and attending meetings on behalf of all its members. Border to Coast, the fund's chosen pool, is also a strong advocate of RI and believes that businesses that are well governed and run in a sustainable way will be more resilient, able to survive shocks and potentially provide better financial returns for its investors. Each quarter, they publish details of RI activities that they've undertaken, and this report is available on their website. A link to this is included in the report so members can look in more detail at the work that they've undertaken. But in summary level, it includes supporting a selection of appropriate RI investments, supporting industry-wide initiatives, and overseeing voting on partner fund holdings. In addition to the work that Border to Coast undertake directly, they've also appointed Robeco, who provide voting and engagement services for Border to Coast and the underlying partner funds. As with Border to Coast, they also publish quarterly activity, and again, there's a link in the report to this. The final section of our report today covers the voting activity which has been taken for the shares which the fund holds, and these are from assets managed by Invesco and the 2 equity holdings with Border to Coast. Specific details on the voting activity are set out in appendices A to C, and I'm very happy to take any questions on the report today.
Thank you, Claire. Are there any questions from the board? There's none showing in the chat box, and I can't see any hands. I think, as you rightly pointed out, Claire, in 1.5, basically that Border to Coast is a strong advocate for RI, and you know, we discuss it at every board meeting, the Border to Coast board meeting, always quite high up on the agenda, along with governance and environmental issues, of course. So no questions forthcoming. Therefore, I'll take you back to the recommendation. Sorry, someone speaking? I think somebody's not on mute, so have a look at that, please. The recommendation is to note the report and discuss any RI activity undertaken during the quarter. Well, I think you've had the opportunity to do that. So we'll accept that the report is noted. And thank you again, Claire. We shall move on then to item 8, which is the pension administration report. Over to you, Eunice.
Thank you, Chairman. I hope everybody can see me and hear me okay. This is our quarterly report up to the period 31st of December. Starting off with the KPIs and the performance and benchmarking. It does continue to be a very busy period. And it is pleasing to say, really, that even though we're working remotely, work is continuing. Our KPIs, our volumes of work are all very high and very pleasing, to be honest. You can see from the table there all the work areas of numbers of cases that we've dealt with and the KPIs that we've achieved. Most of them are excellent, to say the least. And to be honest, there's not any really in this period that are underachieving, other than the transfer out quote, which I've explained before, is really the transfer area is really under big scrutiny from the pensions regulator in terms of remote working, the fact that the potential for scams has increased, and there is evidence of it's not just potential, there is increasing evidence that scammers have increased their activity, and transferring out is one big area really that is easy prey to some of these scammers. So the pensions regulators imposed extra checks, extra requirements on pension funds, and hence the extra work we're having to do. It had been suggested before that maybe we increase the number of days for this particular area, and that's something we're certainly looking at. Or potentially, I think my preferred option is to introduce more stages within the transfer out process, so that we're measuring from a different place in time, and that will then address the underperformance issue of the KPI. Other than that, as I say, we're happy with the volumes. Staff are working extra hard, and this again is in between periods where we are taking on new fire clients, and we've taken on another local government client as well. So work continues on our existing clients as well, to a very high level. You can see numbers in terms of membership of the LPF fund, broken down into the different categories of membership. Again, numbers are quite stable. Pensioner numbers have gone up considerably, and undecideds have gone down as well. So we have been doing some work for undecided, and that's kind of normally the case when we come to the end of the year and start preparing for production of annual benefit statements, etc. Full breakdown of the age profile in the various categories of age groups you can see there. We do, as you know, regular surveys with our members, so attached to Appendix 1 is the customer survey results, and again we get some very good praise from our members in terms of the service we provide. There is one negative comment this time round, and that, yeah, maybe justified in part, but again, this is a complicated case where a member wanted to link their different periods of employment, and we were actually waiting for information, leaver information for one of their periods of employment from the employer. Employer training, we similar to obviously training courses, etc., that are held. Our employer training now is held via webcasts, and we are just in the process of implementing a new round of webcast, and that's been quite a success, to say that we have members now attending across all 4 LG funds that we administer. So there's no location issue in terms of who can attend these sessions, and it's quite good really that we get representatives from across all 4 funds. In terms of the internal disputes procedure, obviously there's a 2-stage procedure in place. We had 2 appeals at stage 1, one against the rule of 85, and the other appeal being refused ill health pension, which is an employer appeal. None at stage 2, and nothing with the pension ombudsman. In terms of administration update, I just wanted to touch a little bit on the Cem benchmarking. This is a benchmarking that we've recently joined. This is the 2nd year of our participation, alongside with a number of other big local authority pension funds. And this actually is a benchmarking not just for the public sector, but for the private sector as well. Cem provide benchmarking, or have been providing benchmarking for a number of years against on the investment side, but in the last 2 years they've now incorporated pensions administration as well. So just some headlines from the initial draft report that we got a few months ago, and it kind of confirms or states that our pensions admin cost is £15.28 per member, and that's below the peer average within our group of £26 and 12p, and you can see the other costs there as well, and we compare very favourably against there. What CEM does, which we didn't get when we were taking part in the SIP for benchmarking, is that not only do they measure the costs, but they measure the overall service as well. So it's value added benchmarking rather than just looking at costs. And in terms of the member services, our total service score was above the peer median within the group. We scored well for service in service over the telephone, service level agreements, benefit statements and feedback to and from members. We scored below the peers in terms of secure member website. That I can fully accept. We will be addressing that later this year when we look at issuing annual benefit statements electronically through the member website. So certainly expecting numbers of our website usage to increase quite dramatically. Meeting members individually, obviously it's been very difficult to meet members during the current crisis. And tracing members and estimates. So the two tracing members I do have an issue with, and that's a query back to CEM really, because we do quite a lot of member tracing and probably more than some of what the other peers do as well. So it feels to me as though they've interpreted the data incorrectly that we've submitted. So there's still dialogue ongoing with that. Current technical issues. Appendix 2 highlights the current technical issues, and I'll very briefly pick out a few points from there. One is the exit cap. I'm sure the committee is aware of recent changes to the exit cap that have now, which has now been disapplied now, and the reason being that the government concluded that the cap may have had unintended consequences and therefore the regulations should be revoked. So that's quite pleasing news really, I would say, in that it was starting to cause issues. It had caused us a lot of work, and really in terms of the application of the exit cap, it just did not feel right in terms of the members that it was potentially going to impact. The other area is the 2021 revaluation and pensions increase. Pensioners this year will get 0.5% pensions increase. I'm sure they won't be very happy with that, but it is the inflation measured from September in the previous year to September of last year. The pensions dashboard, that is continuing ahead. Recently, the pensions dashboard programme published their data standards, and our pensions administrator are engaged in terms of making sure that the requirements for the pension board, so that when that comes into force, that they're aware of their requirements, they're aware of what we need as administrators to be able to utilise the pensions dashboard. And one of the main things to be accurate pensions data is the accuracy that we hold up. So there is work going to make sure that we're ready for the dashboard when the first auditing of it, which is expected to be in 2023. And then lastly, on McLeod update, that again, work on McLeod continues. We are in the process of issuing a data template to all the employers within the funds, and recognise the fact that both employers and the pension fund administrators will have lots of work to do in preparation for McLeod in terms of getting the data that's required. So the planning for that is going ahead, and we're getting ready in anticipation of the work that will result from that. So going back to the main report, and the last item I have is the shared service budget. You can see from the tables and the figures there that our cost per member for 2021 is £30.22, and that compares against the budget of £15.08p. What that means is that each of our partner funds will receive a £3 rebate per member against the invoice for next year, which probably will be going out shortly. So that's quite pleasing in terms of the fact that our costs are considerably lower than what we had budgeted for, and quite pleasing to report on that, really. So I'll leave my report at that, and happy to take any questions.
Thank you, Eunice. Very comprehensive as usual. Thank you. Have we any questions from the board? I can't see any in the chat. No, none forthcoming. Can't see any hands. So, yeah, thank you again, Eunice. Yeah, it's good that costs are being kept down, and of course the targets in the main, apart from the one you mentioned, are being well met. So that is an improvement on what we've seen before. So that's good news. Very encouraged by that. So I think because there's no one else wishing to comment, Eunice, I'll thank you again for your report, and back to the committee. The committee are asked to note the report. Unless there's any dissent to that, we'll accept that the report has been accepted. So thank you, Eunice.
Mr. Chairman.
Right, committee, moving on then to item 9 is the employer monthly submissions update. Back to you, Claire.
Thank you, Mr. Chairman, and apologies for my slow response. A little trouble with the IT. This is the standard quarterly update on late or inaccurate employer submissions, and the report today covers the third quarter of 2021. The number of late payments and data submissions are set out in Table 1 on page 142. These analyse between late payment of cash contributions, late submission of supporting data, where an employer has made both a late payment of cash and submission of data, and where the cash and data have been submitted on time, but they do not agree, or where the employer contribution rates being paid are incorrect. As you can see from the table, generally, there are very few employers who pay their contributions late. The area of poorest performance remains the submission of data returns. And this is the part which contains the details of contributions down to individual member level. The third quarter of the year started with a large payroll provider experiencing trouble submitting data returns to the fund. And during the quarter, we have been actively engaging with that payroll provider and their associated academy employers to improve their compliance. Progress in this area has been good, moving from the payroll provider making up the majority of the late data submissions in October and November, and that was 14 and 22 of those lates in each of those months, to submitting their returns in January with just one being late. We've been able to agree a revised process with the payroll provider, and it's hoped that this will maintain their improved performance. Details of the individual employers who made late returns is set out in Appendix A. If we move to the top of page 143, Table 2 sets out the number of fines which have been issued during the quarter. And as you can see, there have been 4 fines issued. And I'm very happy to take any questions on the report.
Thank you, Claire. I can't see anyone wishing to ask a question. I think it's fairly straightforward. Obviously, late payments. I don't know whether that's a reflection on COVID or whether it's immaterial on that, Claire. I don't know whether you'd like to comment on that.
I suppose by Q3 of the financial year, people have probably been working at home for at least 6 months by then. So you would like to think that any teething problems that had been encountered would have been resolved by then. I think what we find very much is, particularly with payroll providers, they have waves of poor performance. They might have a number of their team leave, so they've got new starters, which can have an impact. The problem that we've seen, particularly during the last quarter, has actually been about payroll provider staff having appropriate access to the West Yorkshire system, something very easy to resolve, but trying to engage with them to resolve some of those problems tends to take a little bit of time. So they've moved to an approach where, rather than every single member of their team submitting returns, it's been delegated to one member with a backup. So that should improve their performance, and has been seen to, and it's an approach that we operate with other payroll providers, and it's seen to be beneficial there as well.
Thank you very much, Claire. So thank you again, and we'll move on then to item 9. The report has been noted, so item 9 is back to Joe. Sorry, I beg your pardon. Item 10, I beg your pardon. Item 10.
Thank you, Chairman. So this is the annual review of the key policies of the fund, covering the investment strategy statement, communications policy, the governance compliance statement, the breaches reporting policy, and the code of conduct and conflicts of interest policy. Apologies for the huge pack, because all the policies are attached as appendices, and any areas that have been updated are set out within the report under each heading. The main change to the code, the main changes in the code of conduct and conflicts of interest policy at paragraph 12 and appendix E, where clarification has been added to separate out where the requirements for the board and the committee are different, and also to add in a reference to the stewardship responsibilities, going back to the point that Claire made about us trying to improve our reporting on responsible investment and raise that profile within the committee. The two main policies that are missing from this review are the funding strategy statement, which is covered at item 13, and the stewardship code statement, which, as Claire's mentioned, will hopefully be brought to the committee later this year. I wasn't going to mention anything more because, as I say, there are very few and no contentious changes in there, but I'll be happy to take any questions on any of the report updates. Thank you.
Thank you, Joe. No one's showing to ask a question or make a comment. It certainly is a weighty tome, I must admit, and takes a bit of wading through, but everything seems to be in order as far as I can see. Certainly, now that we have no one wishing to ask any questions, and I do not have any, we'll move straight to the recommendations. So there are 5 recommendations, and we will be voting on this. So can I have a proposer first?
Move, Chairman.
That was Bob Boller, I think. And a seconder, please.
I'll second it, Chair. Paul Key.
Paul Key. I think, Mike, you just got in too late there. So we've got a proposer and a seconder. Could we go to the vote, Rachel, please?
Thank you, Chairman. Councillor Strangill.
For.
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Bootroyd.
For.
Councillor Key.
For.
Councillor Mrs Rawlins. For. Councillor Thompson.
For.
Andy Ancliffe.
For.
Steve Larter.
For.
And Councillor Waller.
For.
That's unanimous, Chairman.
Thank you, Rachel. Moving on then to item 11, which is the Lincolnshire Pension Fund Business Plan. Joe?
Thank you very much, Chairman. This paper brings the annual business plan to the committee for approval and is attached at Appendix A. It sets out the overall objectives for the fund, some statistics on the funding level looking back over the last few valuations and cash flow positions, the resources and the budget, and then the key tasks for the year ahead with a look back at progression on those set in last year's plan. Also has the key risks for the funds and a forward plan of the meetings. A lot of the work that's been done over the last year and generally good progress on the key task has been made. Where tasks haven't been progressed, it's been identified in the report, and these are due to factors out of the control of the team, unfortunately. There are 2 new tasks added for 2021. The investment consultancy tender, which I've already mentioned in paper 6, and a staffing and structure review that we expect to undertake during the year, just to ensure that we're appropriately resourced to meet the current and future requirements. Outcomes from both of these would be brought to the committee for consideration and approval. The forward plan is flexible and additional papers or training will be added as required. I wasn't going to go into any more detail than that, but I'll be happy to take any questions. Thank you.
Thank you, Joe. I can't see anyone asking. I'm going to go to the vote on this because it not only says note the report, but to approve the Lincolnshire Pension Fund business plan for 2021-22. So first of all, could I have a proposer, please?
I'll propose.
I'll propose, Chair.
Thank you.
I'll second.
Mike Thompson has proposed it. Volkey has seconded. So thank you for that.
Chair. Thank you.
Go to the vote, please, Rachel.
Thank you, Chairman. Councillor Strengill.
Or
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Bootroyd.
For.
Councillor Key.
For.
Councillor Mrs Rawlins. For. Councillor Thompson.
For.
Andy Ancliffe.
For.
Steve Larter.
For.
And Councillor Waller.
For.
That's unanimous, Chairman.
thank you, Rachel. Before I move to item 12, Claire will be taking. It is difficult, of course, when you all come in. There's no easy way to ask for a proposer and a seconder. So I do apologise to anybody if I don't quite catch who's proposing and seconding. But thank you for at least coming in with that. So, Claire, if we could move then to item 12, please.
Thank you very much. This is the first report to the committee for the 2021 annual report and accounts. And today the report covers changes to the guidance which will be used to prepare the accounts as set out in the Code of Practice and the accounting and audit regulations, and the proposed accounting policies which the fund will use to prepare the financial statements. If we look first at the Code of Practice, changes for 2021 are mainly presentational around how information is set out in the accounts, and this is brought about to align our reporting with the statement of recommended practice for pension funds, so with the pension funds up. This makes changes mainly around our investment notes and the disclosure requirements there, and the detail that we need to include within investment management fees. These changes are required for 2021, but also for the previous year's disclosure, and this will be reanalysed as part of the accounts preparation work. The audit and accounts regulations were out for consultation when the report that is in front of you today was put together. The Ministry for Housing, Communities and Local Government have now issued amendments to these regulations. And as anticipated, this sets the date for issuing draft accounts to be before the 1st of August, and the date for final publication and completion of our audit to the end of September. And the pension fund will work with the County Council and our external auditors to publish accounts which match these deadlines. The deadline for the annual report remains unchanged as at December. The final section of the report looks at the accounting policies which we will use to prepare the financial statements. Because there have only been minor amendments to the guidance, we only have minor amendments to the accounting policies, and these mainly are around clarification of wording to make it clear what we're doing in our accounting. The most significant of these is around the valuation of financial assets, and the policy makes it clear that we will consider further valuations received during the accounts preparation period and audit period for inclusion in the accounts. And we're currently discussing our approach to this with our external auditor. If you remember last year, because those periods are extended, there is the possibility of further valuations coming in after the 31st of March, which could have an impact on our accounts, and we will be considering those throughout that time. And I'm very happy to take any questions on the report.
Thank you, Claire. I've got one. Steve Larter would like to ask a question. Steve?
Thank you, Chairman. Not directly linked to the report, but is there any update on the last year's sign-off of the accounts? Because at the last meeting, that still hadn't been completed.
Yeah. Do you want to take that, Andrew?
If I could take the mic, Chairman, I'd like to do so. Probably is useful an update for Councillor Rawlins, who's chairing the Audit Committee as well tomorrow. So nearly there, not quite fully yet though, unfortunately. So we as we updated last time, we engaged a specialist valuer to value the energy from waste plant in North Hykeham. Pleased to say that the valuation that came back from that specialist valuer wasn't a million miles away from what we had in the accounts, and therefore doesn't require us to change the accounts. That's our option to do so. It's well within the materiality limits that we're allowed to apply, and would naturally then get updated the year after, so the 2020-21 accounts. So that works with Mazars at the moment, going through their quality assurance process. So whilst we won't have the account signed off for the audit committee tomorrow, we're not saying we're in a matter of days and weeks now rather than months away. Naturally, we would have wanted to have provided the assurance that it had been done to this committee today and the committee tomorrow too, but unfortunately these things take time. But yeah, as I say, not a million miles away. Thank you, Chairman.
Thank you, Andrew. Thank you, Claire. I don't have any other speakers I can see. So committee, the recommendations are threefold. The first two are to note, but I will read all three because we are going to vote. Especially on the last one. So note the changes required to the statement of accounts from the Code of Practice 2020-21. Note the proposed changes to the accounts and audit regulations 2015, which are currently laid out for consultation. And finally, to approve the statement of accounting policies Appendix A for use in preparing local government pension scheme pension fund accounts for the financial year ending 31st of March 2021. Could I have a proposer, please?
I'll propose,
That's Sue, I think, and I think Bob Waller was seconding. So that's proposed and seconded. Go to the vote, please, Rachel.
Thank you, Chairman. Councillor Strengill.
For.
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Bootroyd.
For.
Councillor Key.
For.
Councillor Mrs Rawlins.
For.
Councillor Thompson.
For.
Andy Ancliffe.
For.
Steve Larter.
For.
And Councillor Waller.
For.
Thank you, Chairman. That's unanimous.
Thank you, Rachel. Moving on to item 13 then, which is the Lincolnshire Pension Fund Funding Strategy Statement and Employer Flexibilities Policies. Over to you, Joe.
Thank you, Chairman. Following the appointment of Barnett Waddingham as the Funds Actuary from the 1st of January 2021, the funding strategy statement has been reviewed. As set out in paragraph 2, there have been no material changes, and a full scale review will be undertaken as part of the 2022 valuation process to update for the new methodology that they will be using. Some of the changes made in the FSS refer to regulatory changes required, which introduce new employer flexibilities following the LGPS Amendment Number 2 Regulations 2020, which came into force in September 2020. However, guidance from MHCLG and the Scheme Advisory Board was only released in its final form in early March. These allow for the flexibility for employers with contributions both on exit from the fund via either spreading of exit payments across a number of years or allowing employers to remain in the fund with no active members but still paying secondary or deficit contributions, and also via enabling interim contribution reviews between actuarial valuations. The fund is now required to have policies in place dealing with these new flexibilities, which cover the deferred debt and debt spreading and the contributions reviews. The aim of these policies is to protect both the fund and the employers, and these policies are set out at appendices B and C, and further detail on the policies is set out in the report at paragraphs 6 to 12. Officers have worked closely with the actuary to prepare these policies, and they've been sent to all employers for consultation alongside the updated funding strategy statement. I've had a number of discussions with employers about the policies, but there has been no negative feedback, and that consultation closed yesterday. I wasn't going to say any more, but I'd be happy to answer any questions on this paper. Thank you.
Thank you, Joe. I can't see any speakers in the chat. No hands that I can see. No. Right, Joe, thank you for that. I'm going to bring the committee to the recommendation then. We're going to vote on this, that the committee approve the updated funding strategy statement, the deferred debt and debt spreading policy, and the contribution review policy. So could I have a proposer, please?
Move, Chairman.
If you just put your screen on, then I can see who it is. So somebody put their screen on, I'll see.
I'll move, Chairman.
Thank you, Bob. Paul Key, second. Can we move to the vote, please?
There we go.
Thank you. Move to the vote, Rachel, please.
Thank you, Chairman. Councillor Strenggill.
For.
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Bootroyd.
For.
Councillor Key.
For.
Councillor Mrs Rawlins. For. Councillor Thompson.
For.
Andy Ancliffe.
For.
Steve Larter.
For.
And Councillor Waller.
For.
Thank you. That's unanimous, Chairman.
Thank you, Rachel. Moving to item 14, and there will be a vote on this as well. Consideration of exempt information in accordance with Section 100A for the Local Government Act 1972. Agenda items 15 and 16 have not been circulated to the press and public on the grounds that they are considered to contain exempt information as defined in paragraph 3 of Schedule of the Local Government Act 1972 as amended. Press and public may be excluded for the consideration of these items of business. Rachel, over to you to exclude the press and public if they are there, please, and then confirm.
Thank you. Can you ask for a seconder and then I'll go through the vote?
Second, Chairman.
Right. I propose it. We've got Mike Thompson seconding. Go to the vote then, and then we'll exclude them. Sorry.
Thank you, Chairman. Councillor Strenggill.
For.
Councillor Coupland.
For.
Councillor Adams.
For.
Councillor Bootroyd.
For.
Councillor Key.
For.
Councillor Mrs Rawlins. For. Councillor Thompson.
For.
Andy Ancliffe.
For.
Steve Larter.
For.
And Councillor Waller.
For.
Thank you, Chairman. That's unanimous. I'll just confirm that this stream has ended before we continue.